Good morning, everybody. A lot to cover in today's video. We're going to be taking a look at the major 4 U.S. indexes. We're also going to be discussing what the Fed rate policy decision was yesterday, what that could mean for the markets moving forward, and we'll take a look at how that really is affecting the banking index as well as financial services in today's video. So let's jump right into it. The area that we have been paying massive attention to, and this line that we have drawn on the chart every week basically for the last few months, is that 2820 zone on the S&P 500, and we have broken above it this week, and we have back tested it, and we have continued to push up here today following the Fed announcement yesterday. So we are finally over that resistance level. This is pretty bullish, and if you notice, we've got the 10 moving average, which is over the 20. The 200 is over the 50, so we'd like to see the 50 over the 200-day moving average. That crossover should take place, within the next week or so. If that were to happen, we would have all of the moving averages aligned properly and pointing upwards, and that, of course, is a bullish technical signal. Now, there's two last resistance levels that we have here. And one is where that breakdown happened back in October, and that's right in there at that 2880 zone. And then, of course, you have that resistance at all-time highs. So the last two resistance levels that the bulls have to capture here this year, and then it's open sailing and all-time highs above, really are not very far away. One's about 1%, the other's about 3.5% away. So really, really strong action thus far. Let's take a look in at the Nasdaq charts. A little bit different. There's only one resistance level above, and that's basically due to the way in which this chart is structured. It's a little bit different than the S&P 500. We've discussed that in depth in a lot of these videos this year. The 10 is over the 20, which is over the 200, and the 200 is over the 50. So again, same thing. That 50 and 200-day cross. We're looking for that to happen. That would happen about in the next week if it were to happen. But it clear leading broke above its resistance level, has held much stronger. It was actually up yesterday. A fair bit after the Fed announcement, and then a beautiful fall through here today. Next resistance level is all-time high, and so that is, of course, what we are watching. Now, when we jump over and we take a look at the Dow, a little bit different. Now, Dow's only got 30 companies in it, so if one were to have, an issue, a news event or something along those lines that would be a negative on the company, that can certainly have a weighing down effect on the index as a whole. And an airline company that has been all over the news as of late had some issues. It's been down sharply off of that news, and that subsequently has held the Dow below its resistance level. So we are watching that resistance level, so it has not broken out yet. And then the next resistance level above it would be that all-time high. So those are the next two levels that we're looking at. When we look at the moving averages, I'll zoom in so you guys can see the 20 moving average is above the 10. So it's the only one where the 10 is not above the 20 that we've looked at so far. The 50 is over the 200. So another couple of days, and we would also have the alignment of the 10 over the 20, over the 50, over the 200, and everything pointing upwards. So that could be bullish. And once again, we will be looking at that resistance level. But because there's only 30 companies in this index, if one of them is having a bad go of it, it leads to the index as a whole sometimes underperforming, and that is what we are currently seeing. Now, we'll jump over and we'll take a look at the Russell. The Russell has been the lagger all year. It led us to the downside. It has not gotten back over its 200-day moving average. It is still under the 200-day moving average, and is still under its major level of resistance. So big time lagging versus the rest of the indexes. 200-day moving average is above, the 20 is above the 10, the 50 is below. Only two of those moving averages are pointing up at this moment. So the Russell is still a mess technically, and it is the one major U.S. index that does not fit the mold of the rest. It is not over its resistance level. It's not over its 200-day moving average. And of course, the Russell is that risk-on market where people tend to put more capital towards the mid and small caps when they are expecting long-term growth, and i.e. it's worth that risk to take. When the Russell lags the overall other indexes, that can lead to sort of that mindset that people are not willing to take on as much risk, and that can tend to be a little bit more of a bearish leaning. So what happens on the Russell is really important. I think we need to get back over that 200-day moving average. I just don't see how the rest of the indexes can go up, and make new highs with the Russell really just lagging so much. So, yeah, off of its highs, it's still over 10% away at this moment. It hasn't broken down, so it is still, forming what could essentially be an ascending triangle pattern, which if it were to break out would be a bullish signal. But again, we have to wait and see if that's actually going to happen. The way this is set up currently, it's under the 200-day moving average. It's the lagger of the group, and I think what happens over here is really important. So let's talk about what the Fed did. The Fed decided that it was not going to raise rates and only saw one rate hike through 2020, which was a much more dovish stance than the market essentially was expecting. We're expecting more rate hikes than that. And because of that, let's jump in and look at what happened to the banks. Banks, interest rates rising is good for them because they're able to charge more interest on their loans. That subsequently is more profit for banks in the most basic sense. And so off of the idea that we're not going to have as many rate hikes, the banks sold off here over the last couple of days. So this is the Dow Jones U.S. Banking Index. You can see it was rejected at that 200-day moving average. Much like the Russell, under that 200-day moving average, the moving averages themselves do not hold the same bullish stance that the other three U.S. indexes do. And subsequently, this does look weaker, and that is certainly a win for the bears, so to speak. It is hard to see the market, ripping, roaring, rallying, and making new all-time highs and continuing to run without the banking index being a portion of that. Now, what I will say is the banks versus financials have a little bit of a different picture. So if we take a look at the banking index that we just did versus the financial service index, we see a little bit different of a picture. Now, the financial service index would include things like credit card companies and other financial services alongside of the banks as well. So it gives kind of a more picture from financial, not just on the banks, which of course are having that issue with the interest rates at the moment. You'll notice that this is above the 200-day moving average. It's fighting right around that breakout level. So the financial services index as a whole is a stronger looking chart than the financial than the banking index on its own. So in summation from today, we've got 3 of the 4 major U.S. indexes trading over their over the 200-day moving average. 2 of them are over their breakout levels. 2 are still below. We're watching and paying attention to what happens with the Russell. The banking index itself has made a little bit of a breakdown under the 200-day moving average, but the financial services index is over that 200-day moving average, showing that there is strength in other things outside of banks inside the financial services industry. So moving forward, we're just a stone's throw away from all-time highs on the S&P 500 and on the Nasdaq, and that is certainly what we are going to be paying attention to and watching here over the next week or two. But we need to see the Russell kind of jump in and join the gang, so to speak, as well as the Dow. Love to see it back up over that resistance level if we're really going to make this push for those all-time highs and be able to sustain it. That's the most important piece. So I hope you guys have yourselves a fantastic week, and as always, I'll see you guys next week. Take care.